Let's start with the Brent crude prices, which are up more than 1%, or rather $1 per barrel today, as tensions rise in the Middle East between Turkey and Syria. The upward pressure is also coming in on the prospect of a decline in the U.S. crude stockpiles, which offset the concerns that the EU summit would fail to resolve the region's debt crisis. And there you have good gains coming in for Brent. Can't say the same for the NYMEX crude prices, just about holding $79. The gold in the meanwhile is holding steady above $15 per ounce after rising in the previous session. Growing uncertainty on whether the European Union summit this week will be able to resolve the region's debt crisis is supporting the precious metals. At this point in time, nearly $1 down, but 1580 is still holding on for that metal. Time for strategies then, and we are joined by Viral Shah. He's head institutional business, Geojit Comtrade, and Vijay Bambani is author and CEO, BSPLindia.com, and they join us live in the studios. Viral, hi, let me start with you, and let's start with the crude prices first. While we have seen Brent gain up, NYMEX still is languishing on the lower side. How do you see both these crudes performing?
Well, as you correctly said, because of the rising tensions in the Middle East, we are seeing some uptick in the prices for Brent, not being reflected in the WTI. But there again, I guess we are expecting a small technical bounce back because the market has corrected quite significantly. And for the day, I think 4540 or in the whereabouts of that should be a good opportunity to go long into the market. Here we expect the target to be for close to about 4,610 or 20 or so. So we are looking for a more technical bounce back in the prices currently.
So some support coming in case of the crude prices. But Vijay, how about the natural gas prices? Of course, that has been rising one side on the higher side. Are you looking at much more gains? We've done 150, 155 as well. What are the upsides now?
Manisha, today is the expiry of the June series, and the July series will suddenly start to see increased activity as rollovers, etc. take place. I think in the absolute near term, there might just be a flash spike up. And then there could be a little bit of a profit-taking decline and then a resumption of the rally. What is important for swing traders is to note that the 150 levels in the July series holds in case of any decline. As long as the 150 level holds and the momentum remains above the 155 levels, there's a fair probability that the prices will surpass 160 in the July series. So for aggressive risk takers, one can buy small lots in the July series at 154 or 155, holding with a stop loss at 151 and expecting to book profits between 159 to 160. Once the price starts to sustain above 160 after a healthy profit-taking routine decline, I think one can increase exposure. But for now, fresh exposure needs to be curtailed because of the expiry considerations alone.
Viral, how about the precious metal prices? Because while we've seen gold gain up, and it actually also has decoupled from the declining equities that we saw yesterday, even though the euro is holding on the lower side, we've seen gold kind of hold on. Is it flight to safety, and do you see it continuing?
Yes, there is definitely some amount of demand that we are seeing at lower levels. On MCX, there is another big variable, which is the currency markets, where we have seen extreme volatility over the last 2 or 3 trading sessions. So quite difficult to actually pinpoint the right price to enter into the local markets as such. But internationally, we are seeing some amount of demand coming in at about $1570, $1580 levels, and as well as for silver, where the support is close to about $26 or so. So here again, we are expecting a bounce both for gold and silver. On the local markets, for the August contract of gold on MCX, the prices of 30,150 should be a good level to enter, with a potential target of 30,300 or so. And in the case of silver, rallies over 53,500 can be bought with a potential target of 54,300 or so.
All right, so buy calls coming in for the precious metals as well. But Vijay, would you share the same enthusiasm for the base metal prices as well? Because the data has been weak, barring, of course, the U.S. home sales, which were at a 2-year highs. Everything else really doesn't seem to be working for this sector.
I completely agree with you, Manisha. I think base metals are looking under pressure in the absolute near term. And starting with aluminium in the alphabetical order, I think I would short the aluminium June series at the 104 levels, holding this short with a stop loss at 104.5. Now I expect to book profits at 103.25. Should the price sustain below the 103 levels, I think even 102 is possible. And this short, which I've been advocating since the last 1 week, has started to work out in the favor of the bears. And I think 102 seems a fair probability as of now. Going to other base metals, I think lead and zinc would be the next dominoes to fall after aluminium goes below 102. I think lead can go into double digits. Zinc can fall another 3 to 4 rupees easily from here. Should copper start to sustain below the 408 levels, I think it can test 401 or maybe even 397. But that's a bridge we'll cross when we come to it. At this point in time, I think aluminium, lead and zinc are looking fairly shaky.
Viral, what's your sense ahead of the EU summit now? What positions are you playing with, especially in case of copper, zinc, nickel, all of them?
Well, I would tend to agree that the data coming out from the European Union and as well as the other parts of the world is not favoring any particular rallies in the base metal side. And we too would recommend a short on copper as well as on nickel. Copper, I think below 417 is a good sell in the market with a potential target of 412, 412, 410. And stops here could be placed above 422 levels. As well as in the case of nickel, we are expecting the markets to correct to about 920 or below that 900 levels. Stops here could be placed at about 950 levels or so. So you can sell probably at about 938, 940 levels here in nickel as well.
Viral, if you look at the data of this quarter, the crude prices are down 23%, copper is down 14%, something like a gold is down 6% as well. So the whole quarter in that turn has given you negative returns. Going into the next quarter, I mean, of course, we still have this week to play, but going into July then, what's your sense? What could the next quarter really be offering?
Well, for a longish period of time, we were anticipating crude prices to correct because while the data was coming negative in most parts of the world based on slowing demands and monetary problems in the European Union, crude prices still were at a considerable higher level. So, we have seen a good amount of correction in that. Going into the next quarter, we would be slightly more cautious of recommending a short purely because now the weather concerns will start coming in from the US. We are headed into again the hurricane season and because the prices have corrected a little bit further than what people had anticipated, I think any particular weather-related developments could easily spike up the prices. Whereas in case of base metals, we have to really see some concrete action and data coming in from Europe and other parts of the world, whereby there is some sense of, either a fiscal QE3 or something like that, which will prop up the markets and, give better returns on the commodity segment. But as of now, we are slightly averse to going aggressively short on crude purely because of the fact that we are headed into the hurricane season. So weather remains a big question for us.
All right, so not short in crude, but for base metals and precious metals, we'll really need to watch out. The QE3 hasn't happened, but that can. And while the Europe and China is something that the markets will be waiting the data from that part.